It would look like that. And I can just tell you from being a guy who has stared at millions of charts, it feels like, and spent countless hours staring at charts, does that look irrational to me? And it does not look irrational to me. Hey, what's going on, everybody? This is the Blockchain Backer bringing you the latest cryptocurrency news and analysis. And in this video, we're going to cover a lot of things to look at the really big picture of what's going on just on the charts and how we can tie it all together and why I'm so incredibly bullish and that I think XRP and cryptocurrency and Bitcoin, I think they are all going to go up and hit their all-time highs relatively soon. We've talked about a lot of different things, but I'm going to show you what I think is going to happen and how I think we're actually going to hit the all-time highs much sooner than you think. Over here, we're going to take a look. This is the Bitcoin dominance chart, and I do think that the Bitcoin dominance is going to be falling drastically and quickly. And we can see that I do believe that we are in this parallel channel right here. And when we lay down the Fibonacci analysis on top of this fall right here, and you can see that this breakdown level right here is the 0.702. And also we are being held down right now underneath the 0.702. And I do believe that the Bitcoin dominance will fall all the way down to around 15% just this year in 2020. Now you may be thinking to yourself, well, wait a minute, if you think Bitcoin's going to set new all-time highs, then how can you possibly believe that the Bitcoin dominance is going to fall all the way down to 15%? Well, you got to remember, I said that I think other crypto assets are going to go hit their all-time highs as well. And from a percentage standpoint and a multiplier standpoint, in order for those assets to reach up to their all-time highs, they have to gain a whole lot more than Bitcoin does. So percentage-wise, for Ethereum to get back up to its all-time high, for XRP to get back up to its all-time high, it's a significant multiplier compared to Bitcoin to reach back up there. For example, for XRP to get all the way back to its all-time high, it would have to grow 18 times. Whereas for Bitcoin to reach its all-time high, it would only need to grow 2 times its current price. So the altcoins have been pulled down drastically in comparison to Bitcoin. Bitcoin only has to 3x in order to reach back to its all-time highs, whereas, like XRP has to 17, 18, 19x itself in order to get back up to those highs, and that is going to take away the dominance from Bitcoin. Now, this is kind of a fun chart to play with. This is the log scale chart of Bitcoin over the course since 2012. And really, if we kind of lay down this trend line here, this one that has been a support for a while, you can see a couple of different things that, has been this potential support riding up here. And then we got our big capitulation breakdown that occurred right here, and then came back to touch the trend line and were rejected by the trend line and then came back off of it. And then when we zoom out on this a little bit, now let's go ahead and put down some Fibonacci's on top of this, because we've talked about different price points and price targets, and see if we can find maybe a timing of when something like this would happen. Let's say we can't get through this trend line, and this trend line, this previous support that is now turned to a resistance, is going to remain a resistance, and that we're going to go back and hit it again while we are hitting our Fibonacci retracement levels or our Fibonacci extension levels. That would mean that we would probably come out and hit it way over here, which is around the beginning of January for 2021. And when I envision something like that happening, it would be that we come up and we break the all-time highs. And like I've talked in my other videos, do this kind of double tap thing, come out, hit it, and then we just grow and then slam into it, and then off we go. Now, what would that look like if we didn't have this on a log scale chart? It would look like that. And I can just tell you from being a guy who has stared at millions of charts, it feels like, and spent countless hours staring at charts, does that look irrational to me? And it does not look irrational to me, because what we have is we have the big initial bubble collapsing, then we have the retrace and the consolidation, and then we go start our new cycle. And this far of an extension out up to about $74,000 does not seem irrational to me. It seems completely normal. I also find it quite exciting that we could see that we actually collide into this thing at the end of this year or at the very, very beginning of 2021. It has a potential. That is, if we are still stuck underneath that support line, or underneath that resistance line, that if we're going to hit our Fibonacci extensions, when would we hit it? Well, we would hit it at the very end of this year or the very beginning of 2021 in January. And then when we kind of outline what a bubble structure looks like, which is what I've got drawn right here, this is what it looks like. You break out over the highs, you double tap it, you break out again, then you go back and test that all-time high, and then you go on to go hit the Fibonacci extensions. Now, yesterday I caught some flack for really kind of talking about how it's a good thing that cryptocurrency has followed the stock market for so long, because I actually do believe that the stock market is going to bounce. I think it's going to turn on itself very soon and start setting new lows lower than last week or the week prior. However, I do expect that around the 16,000 point level, we should see some support come in for a bubble structure. Now, I got a lot of comments in there saying, no, 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 we're going into Great Depression. You know what? We very well could be. I could be wrong on that. But the thing is, as long as that support level isn't broken, that 15 to 17,000 support level isn't broken, you have to assume that it is actually going to hold. Once it's broken, then you can absolutely, I'll be on board all the way saying, yes, it's over. However, I do expect that the dollar is going to fall. I do expect that the Federal Reserve is going to be buying stocks. I do expect that they are going to be injecting so much money into this and collapsing the dollar at such a rate that Wall Street will still win. Also, as you can see right here on this screen, and I did share this on Twitter this morning, here is the comparison of the Dow Jones Industrial Average on the left and the 1929 Dow Jones on the right. So this is current times. This is back in 1929. And in 1929, the Dow Jones went to a much irrational higher pricing. Now, if 15,000 points breaks, I'll consider this the Great Depression. However, if it holds, it is likely going to print an even more Fed injected irrational bubble. And let me show you that too. So you could see when we set up these Fibonacci's, we haven't even reached out nearly as far as we did in 1929. Even if we come down here and look at these little moves right here much closer, you can see that the bottom of the great financial crisis was around 64 to 6,500. The bottom of this one right here back in 1921 was around 63 to 65 was where the bottom, and then it went on to reach up to 385. So if we get rid of the Fibonacci's and we just talk about from the bottoms to the tops, that would mean that the top of the stock market, if it was going to have an equivalent type of, euphoric bubble, would mean that the top of it would come in, ironically, right around where the actual Fibonacci level is, because this one stopped right up here at 386. In current times, that would be 38,600. And 38,600, ironically, gets us right there. So accounting for any type of error I have with drawing my Fibonacci's on this screen right now, you could pretty much assume we're going to the 4.236 Fibonacci extension level, and we haven't reached it yet. One thing that will be really interesting to watch is that when we've seen bubble structures in any type of cryptocurrency charts, this first initial move actually retraces to the 0.382 right here. So if this turns on itself right here, right now, we have even more confirmation that things are actually still going to actually go up. Now, if this comes up a little bit higher, then things start to change a little bit. We'll see. But as long as it actually gets stopped right there, right now, then it's still doing exactly what it's supposed to be doing if it's printing a more irrational type bubble. Now, don't get me wrong. All of this that went on right here, it's all bad. It's all horrible. I mean, it was completely done with debt-induced stock buybacks. We gave tax cuts to corporations who then used the money to buy and pump and dump their own stocks. So I'm in no way saying that the economy is going to be thriving and doing fantastic. It's looking quite scary for the economy. And in particular, I think that the housing market is already in collapse. I could see a scenario where the stock market is flying and the economy is actually doing bad. And why would that happen? And it's because of all this money being injected into the stock market by the Federal Reserve to pump the prices. So Wall Street will be jumping and screaming and happy and having a great time. However, normal people like you and me, we're all going to be sitting there saying, I can't go to the grocery store. I can't afford my groceries. I could see a scenario like that playing out. So don't think of this as me saying the economy is going to be doing fantastic. I'm specifically talking about the chart that we're looking at, and that money is about to be printed and injected. Again, if this level breaks, if we get down below here and we just keep going down, well, then I completely think that this market's going to go down to 4,000. The Dow, 4,000. But as long as we haven't broken it, I'm still going to be in the belief that there's the potential that this thing still has quite a ways to go. And it's probably going to be even more shady than the stock buyback bubble. As for the dollar, nothing has changed. On Saturday, I posted a video really kind of deep diving into the dollar and what I think is going on with that. Still believe it's going to come all the way down here. Now, a lot of people want to think that, the dollar is going to collapse and the stock market is going to collapse at the same time, but that usually doesn't happen. Usually it's going to be one or the other. Either the dollar is growing like crazy because people are selling out of the stock market, or the dollar is falling because people are buying into the stock market. And you have to take a look at what is government trying to do right now. They're trying to issue negative interest rates and zero interest rates. And the design of negative and zero interest rates is to get people to move out of saving. So they don't want you saving your money in the bank. So the options that you have is going to be one, keep your money in the bank and get negative interest on the money that you're saving. So you have to pay interest to save your money. The second option is you can take your money out and hold on to it physically and hold on to physical cash and be responsible for the safety of that. Also, we're going to be seeing the dollar depreciate in value, so you took your money out of the bank to hold on to a depreciating asset. The third option, the one they're trying to push you into, is to push your money into the stock market. So I think they are going to intentionally depreciate the dollar. And with that comes a rise in cost and hyperinflation. When you see hyperinflation and the cost of goods going up, typically you're going to see the hyperinflation bubble occurring at the same time. We're going to see the asset prices flying at the same time. That doesn't mean that the economy is doing well. The economy could be doing terrible, but hyperinflation causes everything to go up. So do I think the economy is in trouble? Oh man, do I. I think the economy is in super big trouble. But I think we're going to witness something that is quite irrational, and that's going to be some type of bubble. But with that, we can expect that we're also going to reap the rewards of that. And I talk about this that I'm huge into coin roll hunting. I'm huge into, getting silver and buying constitutional silver and junk silver and all bullion and all that kinds of stuff. And right now, just, in the community of like silver stacking, it is crazy because you can't stack it. You can't get it. And you literally just can't get it. You're stuck. The only way you can get it is if you pay way over price. And I think that mindset is going to swap to digital assets pretty quick on how can I get something to hedge against the dollar that I can actually hold on to right now and I can get at fair pricing or at market pricing right now. Because with physical silver, you can't get it. So while I may present like the alternative to the Great Depression on the Dow Jones right now, don't think that I don't know, man. I got so much flack in the comments on that of people who are just saying, no, we're going to Great Depression right now and digital assets will rise in the Great Depression. And I'm like, okay, wait, we're all missing the point here. The point is that things are probably, in regards to asset prices, going to fly because the dollar is falling and the Federal Reserve's injecting money and people are flocking away from the dollar. I think that's what's going to happen. I think we're going to see that on everything. But I also think that we're going to see incredible amounts of layoffs, unemployment. We're watching the oil market collapse. We're watching all types of negative things happen in the economy. And then at the same time, people are going to be like, well, the only way I can make money now is invest in the stock market. And then that bubble will pop and it's all over. I will be getting out of the way before that bubble pops. And now, mind you, I'm only going to buy the stock market if it gets to 16,000 or 16 and a half, something like that. If it gets in there, I buy it. If it breaks lower, I'm out. And let me be real open and honest with you about the amount of money that I will be putting into the stock market. The amount of money I'm putting in is 1/10 of how much I have in cryptocurrency. So I have 10 times more money in cryptocurrency than will be going into the stock market. So it's not a huge amount. It's just to play the ride. But I think in cryptocurrency, we have an even bigger ride coming, a much bigger ride coming. And I'm pretty excited about it. I hope you're excited too. We've been through so much through all of this together, and we're gonna just ride through it. And then when we get to the other side, it'll just be like, I can't believe it. What a ride. What a horrible, horrible ride. So, all right, guys, that's going to be it. Here is my Twitter page. You could follow me at BCBacker. I want to thank you all so much for watching my channel. Please like this video and give it a thumbs up. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.